Hey traders, Raghee here, and in this free recap video, the market got Powelled, and that's really what happened today as Jerome Powell, head of the FOMC, was speaking in New York, and seemingly seemed to signal to the market that they're about done raising rates. It was probably the most neutral or least hawkish sounding he's been in a while. But let me show you guys a few things. And look, the equities market and the dollar took this to heart. It definitely was something you could see play out in those markets. I'll show you that in a moment. But what he said was absolutely in line with what was already being told in the Fed Fund Futures contract. And this is a tool that I recommend a lot of folks check out. It's a tool from the CME group, and it's what they call the CME FedWatch tool. In fact, if you Google that, you'll get the link for it. And if you take a look at December, if anybody thinks that Jerome Powell was talking about no hike in December, think again. In fact, this went up. This went up after Powell. This was at 79.2 this morning. I believe it was 79.2, somewhere in there. And this went up to 82.7. So we're actually discounting even more that December rate hike. But And this was always up in the air. What about March? We were already kind of half and half about March anyways. This was not a really big change in what Fed Fund Futures was saying that the FOMC was going to do. What seems to be the issue is a normalized rate. Is that neutral going to be 3.25 or 3? Do we have 2 hikes including December or 3? Right? And if the market thinks it's only 2, that means, by the way, we fall just shy of 3% on that central bank rate. Well, then the equities market's like that, and the dollar would sell off, and that's exactly what we saw into the afternoon. The equities markets ripped higher. Now, I want to mention something, and this is a bias that we've had for a while. The S&P and the Dow have been in oversold territory since Friday and Monday, last Friday and this Monday. They're both in choppy sideways markets where essentially a double bottom is viable. And that's pretty much exactly what we've been talking about in the futures room. And so you could see the zone right there. Another catalyst for bullishness, I still believe, at least a quick move to the upside. I'm not a bull in equities at all, but I'd be ignorant of the potential bounce that the G20 presented. Did I expect FOMC member Powell to come on so strong? And he knew what he was doing. He knew that the markets were going to like what he had to say in terms of the equity markets, and they did. And now the market can start to say, look, they're not, and this is what I find so silly. Did he actually say that he's not going to take the markets to 3%? No, he really didn't say anything. The market extrapolated what it wanted to hear, and it rallied in a way that was already in the direction of the current momentum of the past 2 days, past 2 sessions anyways, and in the case of the Dow and S&P, bouncing off an oversold buy. And a lot of people will say, well, we saw this coming. No, we really saw this coming. We talked a lot about this particular scenario, but here's what I will say. I didn't think this was going to be a Jerome Powell event. I thought this would be a G20, but nonetheless, the technicals don't care what triggers it. They're just bouncing off an oversold level, right? So the question then becomes, well, does this begin the Santa rally? And here's the honest thing. Nobody knows. There's no way of telling. And the only way to play this would be to look for opportunities to play intraday trends. Keep it nimble. And don't try to pick tops here, gang. Please don't. Because remember, in a choppy market, as we bounce from oversold, now we're looking for where it's overbought. And I don't think we're at overbought yet. So please don't step in and try to pick a top. I don't think it's merited yet. And we still have G20 to come. I'm more likely to want to short the NASDAQ and the Russell, probably the Russell even more. I'm more likely to want to short those markets on this rally because those two markets have clear downtrends. And this is what I like to reiterate, we follow the process, gang. The only way to become a successful trader in the long run is to have a process and have it a repeatable process, because there are visual cues by way of grab candles and wave and things that are objective and plotted automatically for us just to read. We just interpret what's already on the chart and decide what we want to do. So am I open to a short on Russell and the Nas? Here's the takeaway for this video, gang. If you're a bear in the equity space, focus on small cap and tech. If you're feeling bullish, focus on the Dow and the S&P. Remember the catalysts. We still have a big one in the G20. And I've said for some time that it's that G20 that could ultimately kick off the Santa rally. Powell might have gone a long way with helping that out, but really, at the end of the day, what we've had is a oversold double bottom, arguably double bottom bounce in the S&P 500 and in blue chips. So we'll keep an eye out for where this market could be exhausted. I won't look to short this until probably close to 2820 or 2800 on the Dow. That's how much I think we could continue to move. I won't really even consider shorting the Dow until it gets up to about 25.8, right? So we have to, and really, quite frankly, that would be aggressive. It's really more like a 26.2, 26.3, because just like we had the oversold zone, there is an overbought zone, and we're nowhere near it quite yet. Shorten the time frame, stay nimble. The volatility is high. And in the premium video, I'm going to talk about a tool called the double VIX and how to use that to understand bullish and bearishness, as well as the different positions and trades that we have in play rounding out this last week of November. I'll see you in the next update.